I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mish Shedlock, editor of Mish's Global Economic Trend Analysis on maven.net/Mish Talk. Welcome back to the show, Mike.
Pleasure to be back on, Jim.
Tariff wars, are they getting to the point where it's scary or ridiculous?
Well, both, actually. The Trump backed off of putting on car tariffs, and he made it sound like a victory, as if the EU was going to buy more soybeans from the United States. That report was a complete fabrication of reality. Actually, let's call it for what it is, a lie. The very next day, the EU said that it had no agreement to discuss agriculture with the U.S., and meanwhile, the Trump administration says, oh yes, in a report to Congress, is that the EU did agree to discuss agriculture with the U.S. The fact of the matter is, Jean-Claude Juncker has no authority, and that's who met with Trump. He has no authority to speak for the EU on tariffs. Every nation in the EU, all 27 of them, would have to agree to reduce agricultural tariffs, and let's just say that's not going to happen overnight, if ever. Meanwhile, the report out today from the Wall Street Journal is that Trump is ready to up the tariffs we put on China from 10% to 25%, effectively putting tariffs at $500 billion, which is everything they import here into the U.S. So it doesn't seem to me that the tariff wars have de-escalated at all, other than a brief lie from the Trump administration. And they did put a hold on auto tariffs.
Could China economically survive this? And are the Chinese tending, or their trend is to think very long-term, not short-term? Well,
I mean, let's look at how China could retaliate. It doesn't import $500 billion worth of stuff from the United States, but it can make life more difficult for U.S. companies doing business there. It can prohibit Chinese students from studying in the U.S. I doubt they would do that, because that would hurt them greatly. But one thing that they can do that I've not heard discussed is just cut off supply of rare earths metals, the rare earth elements. They come almost entirely. Production comes almost entirely from China. They are used in the manufacture of industrial goods, and especially military things like bombs, for example. So if China struck back at the U.S., that's potentially one target area they could choose that would hurt the U.S. Meanwhile, prices, if Trump does follow through with what the Wall Street Journal said, I've not looked later this afternoon to know whether or not they implemented it, the costs of goods, it's Walmart, Target, everywhere, anything that's imported from China is going to rise. I don't think that's going to do the U.S. any good.
How do you think U.S. consumers are going to react to the fact that whatever substantial amount of goods they buy at Walmart and so on will cost 25% more?
Well, one other thing that China can do is actually devalue the yuan so that prices really don't rise by that much. We've seen that already The yuan has weakened substantially this year. The last I looked, it was down 7 or 8%. They could devalue the currency another 15%, I suppose. There's risk to China to do that, though. It might exacerbate capital flight. So there's really risks all around, both to the U.S. and to China. Meanwhile, U.S. senators today are in open revolt. Republican senators even. Actually, there's bipartisan legislation proposed today in the Senate to prohibit Trump from using national security as a means of raising tariffs without consulting Congress. So, of course, I doubt that Trump would ever sign such a bill. I don't know. I've not seen roll calls, but I would kind of doubt that there's a sufficient majority to overturn a Trump veto, even assuming that it did get to his desk. But the thing is, I mean, it shows that, you know, even Republican senators are absolutely fed up with Trump's trade policy.
I know Republican state governors along the Canadian border are very worried about these tariffs because they're worried Canadian tourists will start boycotting those states.
Mm-hmm. Mm-hmm. That's certainly possible here. I don't think we're going to know the full repercussions of this because these policies take some time. But the U.S. car manufacturers, I mean, complained bitterly to the Trump administration. They don't want these tariffs. Anyone that uses steel and aluminum as inputs doesn't want tariffs. There's some 36 companies that are complaining in various states over things. And I think that's actually why Trump backed off of putting on auto tariffs, because he wanted to do that on Germany. He's threatened to do it a number of times. Traditionally, he's followed through with those threats, but I think enough senators and auto manufacturers complained that he didn't do it. Thus, we had this surprise deal announced with Jean-Claude Juncker that wasn't really a deal at all, but Trump did walk back from the cliff. So what did he do today? Back yapping about China. He's not going to stop until he breaks something, and it's just a matter of time before that manifests itself in a very bad way for the U.S. economy.
Is China making a point of putting its tariffs on certain sectors of the U.S. economy, people who back Trump?
Yeah, absolutely. You can see it. He went after all the agricultural statement. China went after all the agricultural states with the tariff on soybeans. Curiously, U.S. GDP rose, got about, I forget the exact number, I'll make something up here, about a half a percentage point boost from soybean exports headed to China just in the nick of time to avoid the soybean tariffs. Let's call that a one-time item that's not going to repeat. In fact, it's going to reverse next quarter. The senators that did complain, I think a lot of them were from agricultural states. So it's not pretty when there's an open revolt from Republican senators and congressmen. One congressman, Republican congressman, said Trump was repeating 1929. I don't think it's that bad, but it doesn't have to be. The global economy is way more interconnected. Supply chains way more diverse and hard to reroute than anything we had in 1929. So it won't take as big a percentage move now to cause a lot of pain that we had in 1929. The economies and the supply chains are different enough.
Could all these tariffs trigger a worldwide recession?
Absolutely. The global economy is slowing already. In 2008, we can look back, 2007, 2008, the consensus point of view was that China was somehow going to diverge from the global economy. And I wrote about that at the time, and I said that was crazy, that was not going to happen. Well, today's meme of the day is that the U.S. is going to decouple from the global economy, and it's going to keep rolling right along. It was not true with China in 2007 and 2008, and it's not going to be true for the U.S. here in 2018, 2019. It's simply not going to decouple from the global economy like everyone expects.
We'll have more with Mike Shedlock right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features to our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Mike Shedlock. Mish, the U.S. has asked for its allies to help put squeezes on Iran, but what kind of help do you expect from allies who keep getting hit with tariffs?
You know, that's the thing here, and the big picture here is whether or not these tariffs on Iran are ultimately going to be effective. Certainly, the Iranian currency is responded very badly to this. So, the question is whether or not, say, Turkey, India, China, go along with this. If they break those, exports, if they break those sanctions, then Iran will have, hard currency coming back into it, or at least currency coming back into it. Whether or not they can turn around and buy U.S. parts and things like that is another story. But conceivably, they could get them through Turkey. So there's a lot of things that Turkey can do here, even though it's a tiny country. So those are the key players here: Turkey, India, and China. And it's their policies that's going to control whether or not these sanctions on Iran are ultimately effective. I guess I mean that in Trump's way of looking at things. I think the sanctions are a huge mistake, no matter what the outcome. I thought the U.S. had a pretty good deal from Obama.
Should U.S. oil producers be concerned about talk among Japan, China, Singapore, India, countries like that, forming what they call an oil buyers club?
I don't think that matters in the least. In fact, I hadn't even heard that, but I would have immediately dismissed it as not important. the price of oil is going to be set by the marginal buyer and the marginal supply. So if there's a disruption in the supply of oil, in Iran, for example, prices are going to go up no matter what any buyer's club says. And, it's not like, they can get together and demand lower prices. You either need oil or you don't. And, ultimately that is, going to dictate price, not a buyer's club.
We'll have more with Mike Shedlock right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Shedlock. Mish, is Chicago about to become a ghost town?
Oh, no, not a ghost town. The Chicago's a pretty vibrant city, actually. However, it might be bankrupt, which is a different matter. The whole state of Illinois is effectively bankrupt. We've made all of these pension promises. I actually talked just this last week about my hometown, which is Danville, Illinois, and all of the things that's gone wrong there. And a lot of it's like union related. Heister left for a right to work state, and Boston Aluminum left. T-Pack, Chuckles, the candy was manufactured in Danville. Peterson Puritan, which was one of the world's largest aerosol bottlers, left. The industry just left Danville. When I was growing up, the population was 44,000. It's now 31,000 and change. So there's a talent flight out of cities like Danville. The state of Illinois is not helping at all. It mandates that cities, it actually sets mandates for all cities in Illinois, how much their pension, have to pay, how much they have to pay their firefighters, et cetera, et cetera. One of the funds in Danville is like 17% funded. The other one, the police, is I think 30% funded. And, so we're talking about pension plans that are effectively insolvent. What's Danville supposed to do? Raise property taxes more? To pay for these pension plans for a few thousand firefighters. It's absolutely crazy. This is what's going on in the entire state of Illinois. This is why Illinois has an exodus of people to surrounding states. So it's policies set, in Chicago and in the state. Chicago as a vibrant city, no, it's not going to go under, but it might go bankrupt. And actually it is bankrupt. It's just a matter of realizing it. The longer the state puts this off, the more flight out of Chicago, out of the rest of the state we're going to see.
If Chicago declared bankruptcy, would that clear the deck?
They can't. Okay. The bankruptcy laws are kind of peculiar in the U.S. States can either choose to let municipalities go bankrupt or not. If they choose to do so, they are under national bankruptcy law, not state. The state loses control. So in cities like Detroit went bankrupt, it was the, federal regulators and federal judges that determined the outcome there. Under the Trump administration, I think we would see bigger pension cuts than we saw under the Obama administration for this. But Illinois does not allow municipalities to declare bankruptcy. There are a huge number of them here in the state that I'm positive would declare bankruptcy the moment they could. The state doesn't permit it. So, we'll see. But that is part of Illinois' problem too. They can't do what's needed to be done.
Have self-driving cars become a reality in Arizona?
Oh, yes, absolutely. I mean, not on any kind of big scale, but Waymo is offering taxi services now, and there were a number of people in the early Waymo's early rider program that ferried people to and from work. They've expanded that now to drop people off at shopping and then pick them up when they're done. And unlike Uber, which needs a driver behind the wheel at all times because its technology, quite frankly, is poor, the Waymo is truly self-driving. And so we're going to see more of these kinds of things. And I think although the initial front here is with cars, I think once the federal government, approves these technologies, we're going to see it in a very big way on interstate highways. With trucks, the trucking is going to be, point to point. There will no longer be any need right now. One of the biggest costs is the cost of the driver itself. Drivers have to take breaks every 8 to 10 hours, and instead there will be no mandated breaks. Only enough to recharge batteries or refuel at these stations. That's what we're going to see. I think within 3 years or so of the federal government allowing self-driving trucks on the highways, all long-haul truck driving jobs will just vanish. I think within 3 years we'll see 50% of at least of all the trucks on the highway not having a driver. That's where we're headed here. The technology is starting with cars. I think Waymo, Google will sell that technology to truck building companies, whatever. There will be to get rid of the drivers, there will be a big boost actually in the implementation of all this technology.
Basically, I mean, I've heard in Nevada they run convoys of 9 or 10 trucks with one guy behind them to repair things if something goes wrong.
I'm not sure what national regulations there are for that, but that's actually one of the concerns here with these self-driving trucks is will cars be able to get around these long caravans of trucks? I think we'll see some national regulation in that. Certainly there has to be insurance regulation changes. All kinds of regulations and policies are coming up that are not under discussion yet or just starting to be under discussion in Congress. And, that's one of the things, holding up implementation. But the Reagan administration is pro-business, and I think they want to solve these problems. So we are going to see some action on that front within the next couple of years. We actually have to, for my prediction to be right, But any time before 2021 would likely suffice.
Mish, thank you so much for being on the show.
Pleasure to be on, Jim.
My guest has been Mike Mish Shedlock, editor of Mish's Global Economic Trend Analysis on maven.net/MishTalk. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.